Okay, break of structure. This is what I meant by break of structure later. Again, hope I showed you. This is the break of structure of the bullish market structure. So that break to the downside may signify the interest of the market to develop a bearish trend, this kind of trend, or it was just making a fake out movement to continue with direction to the upper side. It happens. That's when the market will be engineering liquidity, for smart money to accumulate longs to go to the other direction, at the up, to go in the uptrend, in the bullish trend. The break of structure in the bearish market structure is this. That would be the example of a break of structure of the bearish market structure. Break of structure to the downside or shift in market structure. High probability is a high probability for the market to establish the bearish trend or market structure. The same Hana break of structure to the upside or shift in market structure shows a high probability for the market to establish, the bullish trend or market structure, but not always. Break of structure. Here's a DNA explanation of what we mean by break of structure. A bullish break of structure is the break of price to the upside in reference to or of a structural swing high or lower high at this case in a bearish market condition. So this is a bullish market. This is a bullish break of structure. Why is it a bullish break of structure? It is a bullish break of structure because it is breaking the bearish market to the bullish side, showing an interest to go to what? The bullish side. That is what we mean by a bullish break of structure. And what I meant by a structural swing low, high, lower low, this, I think, a lower high, this is a lower high. Why is it a lower high? Is because it is one of the series of that lower highs. That is one of a series of structural swings that have represented the top of that bearish market. I don't know how to put it, but yeah, as the market was going down, it only topped at those lower highs to go down. Top, down, top, down. That's why we called it a lower high, and the ones that are below we call them lower lows, because those are the series of swings that registered lower prices before reversing to the upside. Low price reverse to the upside, higher price reverse to the lower side, low price reverse to the higher price. That's what we mean by lower low and lower high. Yeah, bearish market structure is the opposite of this, bullish break of structure. Bearish break of structure is the break of price to the upside, I think to the downside, in reference to or of a structural swing low, higher low in a bearish market condition. Yeah, that's an example. But happy breaks of structures are different. There's a bearish of structure that signifies a shift in market structure, and there's a break of structure that signifies a fake out, or a liquidity run, or a stop run, or an FU run. FU run or FU raid. FU stands for fuck you raid, because let me give you an example. This is an FU run because there'll be some traders where the market is breaking and retesting to go to the upside, or it's just breaking to continue to the upside. So it'll give them a middle finger to the traders that think that they know the direction I want and then go the other direction. That's why we call it an FU raid. Yeah, break of structure. A break of structure can indicate a reversal or a fake out, just like I said. A fake out is a sweep of liquidity or stop orders. It's a sweep of liquidity or a sweep of those stop orders. A fake out will be used to engineer liquidity for smart money to accumulate orders and head the other direction, which is in line with trend, or it will be used to induce or get traders into thinking the market breaking to the upside signifies or hence turning bullish. Therefore, Yeah, man. Break of structure can indicate a reversal or a fake out. A fake out is a sweep of liquidity or stop orders. Sure. A fake out will be used to engineer liquidity for smart money to accumulate orders and head the other direction, which is in line with trend, or it will be used to induce traders or get traders into thinking the market is turning bearish or is turning bullish. I thinking, or it will be used to induce or get traders into thinking the market breaking to the upside, hence turning bullish, therefore placing stop orders at those areas of liquidity for breakout traders or for break and retest traders, and also stop loss orders being hit for those who were right with direction or trend but will be trailing their stop losses behind structural highs and lows. What does this English mean? Let me try to explain it with my own English. Yeah. Fake outs are meant to engineer liquidity. They will get you to take out to go to another direction. Thinking that maybe it's a break, hence we are going to the upside, or it was a break and retest, which will give us an entry to the upside, or maybe you were right with direction, you entered here for a sell, and as the market was going and made a lower high, you trailed your stop loss or trailing stop here, so that when the market goes above this level, it might it will take you out of the market with profit and then continue to another direction. Or if you got your you were right with direction and got your sell at this around this level, you would have been taken out at this by this price leg, by this swing, by this swing. After the swing would have taken you out, it'll continue to the other direction. Yeah, so I was just showing fake outs and break of structure in this in this line graph example. So this is the opposite with the bearish market structure. This is a fake out, this is a break of structure. And happy guys, I want you guys to know that the algorithm is not moved by the buying and selling pressure of traders or institutions. Well, that might have an effect to price movement, but doesn't cause the move. It doesn't really show the direction of movement of price. Or the price has to move at what direction? It doesn't show that at all. And I'll in the future, in my future videos, I'll show you an example of a market sentiment is what most traders are on. What side of price are they on? The buy side of price, or are they on the sell side of price? There's some things that are there to determine such things, and we use those things to try and show us where are most of the traders interested in. Are they interested in the buy side or in the sell side? Because if they're interested in the buy side, most traders are interested in the buy side. Or nice smart money traders, we should be interested in what? In the sell side. Because why? The statistics diary, most traders are always wrong with trend. Most traders, okay, 90% of traders lose money in these markets. 90% of traders are wrong with direction. So how can one answer most traders are bullish when I seek to be bearish? I'm telling you, if you can get into a trading community, let's say a group like Botswana forex traders, if you can get in those group and then make a pool, or maybe in Twitter, whatever, and make a pool where people will choose, or Instagram will choose we are bullish or bearish in this market, or maybe we are just neutral. If you can put that pool for the trading community to log in there, a buy or a sell, or maybe they're neutral, you want to realize most of the traders the traders that would have taken an option, the option with most traders, traders say we're in a buy. When you look at the market, what are you going to realize at the end of the day? It was on a sale. because these motherfuckers are always wrong, and algorithm realize that, and hence it does those patterns so that you fake out, to facilitate transactions in the market, because liquidity is all about transactions. It's all about transactions, and those transactions at the same time at a fast speed. Those bring what? Volatility. And when there's volatility in the market, moves to another, moves with to a what to a different direction with speed. What will make a fake out to make the true direction. Yeah, I'm sorry for saying things. I don't know nonsense at all. So we're going to do an example. This is the S&P 500 index. This is the sister for Nasdaq 100.